I 5x'd my money investing into a penny stock, turning 20K into 100K, but then I lost it all. It was a roller coaster ride of emotions, and in this video, I'm gonna break down exactly what happened, what went wrong, and what I learned from it all. Everything can change so quickly in the stock market, so stay tuned because this story is a wild one. But first, before I get into all of that, let me first tell you how I built up that 20K, because I had limited capital starting out. I didn't have more than a couple $100 when I first started out with my stock market journey and this whole roller coaster ride that I went through back in 2021. So let me take you all the way back to 2019, November to be exact. I was working part-time as a rideshare driver for this company called Face Drive, and they went public. They were a tiny company that they were trying to compete with Uber. At the time, I had very minimal knowledge about the stock market or anything. I didn't understand market cap. I just looked at stock price, just like I'm sure a lot of people new to the stock market, maybe even you watching this video, still do. I looked at the price of Uber. Uber was trading for about $38. Face Drive was $1 or $2. I didn't really think about the market cap or the size of Uber versus Face Drive. I just knew that this company was trying to take market share from Uber in my local city and area of Scarborough, Toronto. I had a few $100s to my name, so I figured why not, let's invest in this penny stock and see what happens. Fast forward to April of 2020, I had invested $2,162 and I was up $814.32. This is when I also started a position in another penny stock called CloudMD, and we'll get to that a little later. Now, May of 2020, there was a pop. Something happened. And this was crazy to me. My first experience really making any considerable gains in the stock market. So my $2,162 that I had initially invested was up $4,428. In June of 2020, I sold 650 shares of Face Drive at $10.80 a share for total proceeds of $7,000 and a 5K profit. But why did I do it? So at the time, the stock had gone up really fast in a short amount of time. It was a matter of weeks. It had gone up every single day. When a stock goes up really fast in a short amount of time, it is gonna correct and pull back because typically it becomes overvalued at that point. And so that is a good time to take profits. The reason I sold out of my position is that at that point I had learned about revenues and profitability and more about reading financial statements, and I realized that this company was losing money hand and fist quarter over quarter. Yeah, they were growing their revenues a little bit. It didn't make sense to me because I was a driver and the rides were not matching up. So I sold out of the stock. I thought that $10.80 was more than enough. There was no greed on my part, and this is incredible for considering this is my first experience with this kind of stuff. I'm very proud of myself for actually coming to that conclusion. The stock went on to go to $60, so I would have made a lot more money if I just speculated and was a little bit more greedy, but definitely happy with my $5,000 profit on my $2,000. That's why I sold. I felt it was an overvalued stock. The financial statements did not reflect how rapidly the stock was moving, and I sold out of the stock. Now, what do I do with that $7,000? How do we get to 20K? I spread that money between CloudMD, Drone Delivery Canada, and Mind Medicine. I'm not going to talk about Drone Delivery or Mind Medicine. I never made money off those stocks. Just going to focus on CloudMD now. Let me explain CloudMD actually before I move on. So CloudMD was a telehealth play, telemedicine company that was a startup that had been around for maybe 5-6 years prior that was really booming. Healthcare was big during that time, so CloudMD in Canada got a lot of attention. I personally used CloudMD. It was a really great alternative to the current state of healthcare in Canada, especially for if you need a prescription, if you need a diagnosis on something, instead of waiting in a physical waiting room, taking time off work. In 15 minutes, you can speak to a doctor. The doctors are all screened and filtered. I just had a great experience. Any referrals to specialists, it was way faster than what I was used to in the traditional brick and mortar healthcare system, walk-in clinic type thing or family doctor type thing. So I didn't actually have a family doctor that I relied on or trusted at that point, and there was a lot of things I was dealing with that I needed answers to, and I needed like blood work done, this and that. Going down that journey, this company CloudMD put out a quality product. There was bigger players in the space for sure. I thought that, hey, it's free for us here in Ontario for all these FaceTime calls with these doctors. You can get prescriptions. They will fax prescriptions to your pharmacy. They were a SaaS business, so software as a service. That was a big buzzword at the time and a theme in the stock market, kind of like how AI is today. This is back in 2020. Also back then, obviously we were all at home, so telemedicine was even bigger because we didn't know what the future was going to be like. That's why I really believed in CloudMD and I put some money into it. July of 2020, I had $1,100 invested in CloudMD, no returns. CloudMD, I went by the ticker symbol DOC. It looks like in July of 2020, I sold off some of DOC as it fell in the short term. Penny stocks are extremely volatile compared to large cap stocks. The risk is always equal to the reward in the stock market and in everything in life. So DOC fell in the short term and I used that money to buy some more established companies. I guess I was indecisive at this time, so I bought RioCan and Smart Centers REIT and TELUS, so more larger cap or mid caps. At this time I was watching a lot of YouTubers talking about stocks. I mean, they probably didn't know that much what they were doing. Like, I didn't have the quality resources that I follow now. It was more just up and coming YouTubers, and at that time, nobody is wrong with anything that they said at that time, so everyone looked like a genius. But it was good because that's how these opportunities got on my radar. I was getting more and more interested in the stock market after making that money on FaceDrive. Also, it looks like I bought into a company called Well Health. I had $3,900 invested into it with a gain of $1,637. So that's a pretty healthy return. This is July of 2020. So Well Health and CloudMD were my two telemedicine plays. Well Health was actually a bigger operation. The thing with Well Health is they had more access to financing because they were backed by one of the richest businessmen in China. He was backing Well Health, so they had a lot more liquidity, stability for growing the business versus CloudMD. He was one of the big shareholders of the company, so those shares are not getting sold as opposed to CloudMD, where it's a lot of more retail that's holding it. That was the difference. Obviously, when you have limited capital and you're trying to grow your capital, at that time my mindset was, I want to buy the cheaper thing. But then I saw that Well Health was a more quality play at the time, so I moved money over into Well Health. August of 2020, I had $2,823 invested into CloudMD. I was up $2,391, so almost double on my money. I had $3,942 invested in Well Health. I was up $3,302. My portfolio at this time was worth $18,000. I had come a long way already. This was in my TFSA, so this was tax-free unrealized gains. September of 2020, I now had $4,863 invested into CloudMD. I was up $4,786, and I had $2,956 invested into Well Health, and I was up $5,154. So it looks like I sold off some of Well Health to put it into CloudMD or DOC, and my portfolio at the time was now valued at $26,000. And now the story begins. At this time, in September of 2020, I went through an incident in my life where I required $7,000. Things happen in life. Life throws you a curveball. This is the reason why people should have emergency funds, why I stress emergency funds so much. It's so important because if you have the emergency fund, you don't have to sell out of your investment, right? With all the luck I had, I was greedy and not willing to sell out of my positions. So instead, I put that expense on a credit card, thinking that nothing could go wrong. So I had to figure out how to get the $7,000. I had to pay for this expense. If I had the emergency fund, 6 months expenses, I would be able to pay it in cash, no issues, but I would not have taken the risk and I would not have gotten the reward that I did in this story. So I think everything does happen for a reason. October of 2020, I had $8,853 invested in CloudMD and I was up $9,216. So this was $18,000 in my portfolio, and I had $2,956 still invested in Well Health, and I was up $5,312, so $8,000 of my portfolio. My portfolio was valued at $38,000. At the time, there was this YouTube channel called Wall Street Reporter. It was a live stream that would go on every so often during that time. These companies, these small penny stocks, would pay his company, Wall Street Reporter, to come on and go on a live stream and talk about the business. He would ask questions, the chat would ask questions. He had a few thousand subscribers, and he talks about how you can 10x and get a 10 bagger, you can 10 times your money. I had a way different mindset back then. I was a lot more naive and a lot more greedy as compared to now, and I'm a lot more educated now. So I needed to come up with a big play to grow my capital so that when I pull out the 7K, which I didn't need to for a little while, I could more than cover it. There was a few interviews from a CEO of a company called Peak Fintech, and that company was was using AI technology to essentially issue loans to small and medium businesses in China, because the problem they were solving was these businesses would have to wait 6 months to a year, maybe longer, for them to actually get approved or denied for their loan when they needed the money right away to fill purchase orders or inventory. And this company would essentially cut out all humans from this equation, and the software would essentially approve or deny these loans. And that would obviously allow the bank to make a lot more money in a short amount of time by issuing loans and not have to pay a salary to someone doing it manually and doing it slower. I mean, that's how I looked at it. The crazy thing about China is it was just scratching the surface. China has a way bigger population than North America. There's a lot more potential there. There was a huge problem that this small penny stock that was not on Wall Street's radar was solving. And if Wall Street doesn't know about the stock is going to stay very small for a long period of time, and that's your opportunity before Wall Street finds out about it. So this was very early on. The stock was like $1. I didn't invest on a whim. It took me about a month of actually looking into this stuff. So one of the big investors of PKK, which was the stock ticker, his name was Graham. He came on the live stream and it mentioned that, I don't know if you're familiar with it, but Yahoo Finance, when you go into the comments, there's a lot of trolls. There's a lot of, you don't know how old these people are. You don't know how much money they have invested, but there's a lot of people saying all kinds of stuff, spreading fear for whatever reason. There's other people that are, trolling and saying positive things. There's different, both ends of the spectrum. They created their own community of people who are actually serious investors, a mature community. They were promoting it on the stream, and it was free initially. It eventually became like a subscription model. It was like $10 or something, or $15 a month, and I subscribed to it. From there, I actually learned a lot, and that's what gave me the conviction to actually go in and make this investment. This was a community of people that they researched and did due diligence on stocks as a community, and they were talking about how big of an opportunity this stock is, how undervalued it is, how much it can grow compared to its peers. And these were more experienced investors, people who had been investing since the early 2000s. They posted in that community Zacks Small Cap Research Report, which is a firm that researches small cap stocks. They basically run the numbers and do the whole analysis, and they provide a report as to what the intrinsic value of the stock is. And at that time, I remember the stock was like $1 or $1.50 or $2, and Zacks Research was saying this is a $5 stock. Again, at the time, there was a lot of green flags for me to put money into this. I have the support of this whole community that is also invested. I took all of October to research the stock before I could commit into investing $21,000 into it. And based on all valuations and accounts, the stock was egregiously undervalued. So 2 months into making this $21,000 investment, I was up $14,000. So I didn't make any quick decisions because I learned to have a long-term mindset with companies that are in the growth phase of their lifespan. So this company was in the growth phase, and you had to be patient with companies in the growth phase. There was a lot of potential. They had a big moat because of their connections with China, and one of the founders of the company was in China on a day-to-day basis and doing business there, while the other founder was in Canada doing all this promotion and handling operations in Canada. At the time during 2020, there was an app called Clubhouse where you could come on, and there was also Twitter Spaces and stuff came after, I think, but Clubhouse, where you can go on there and you can host spaces and talk with a group, and so anyone can join the room and listen in. So I would join. I would hear all these people talk about this stuff. They would talk about what's happening with the stock price versus the actual developments in the company, because as Jeff Bezos famously said with Amazon back in the early 2000s, the stock price is not the business. So the people in this community always stress focusing on the positive developments within the company versus the short-term price manipulation. Even with large caps, the stock price can get manipulated. It just takes a lot more money to do it. Small caps, micro caps, penny stocks, it takes a lot less money to do it. Someone in their garage or basement can manipulate the stock with just a few $1,000,000. At the time, the stock price was getting manipulated. There was this quote-unquote lawsuit about the company. These are tactics that short sellers put on. I learned this from being part of this community, and it was important not to focus on the short-term price fluctuations, but to focus on the actual developments of the business and how they were progressing towards growing revenues and eventually, hopefully, becoming profitable. At that time, growth was the big thing. The profitability was not really looked at. So the stock went through a rough patch as there was lawsuits created against the company to scare off retail investors like me, as this is common with penny stocks. Small hedge funds, like I mentioned, will manipulate the stock so they can shake out retail investors, so they can buy shares for cheap as the stock price goes down. So I was part of the stock fam community, so that's why I was able to hold on to my shares while the stock took a hit from February 2021 to June of 2021. If I did not have the knowledge, if I did not surround myself with this community, I mean, again, I would not have put $21,000 into a stock anyways, but because I had that confidence and conviction that came from being part of this community and learning from this community, it helped shape my knowledge today. At the all-time high, my position in this stock, my $21,000 to $23,000 became $97,000, so almost a 5x from my initial investment. It's not my whole portfolio, but it was the majority of my portfolio. And my total portfolio at the all-time high became valued at $120,000. Let me tell you about the highs. The stock hit a high of $13.80 on September 3rd, 2021. At the time, revenues were rapidly increasing. This company was generating revenues in the hundreds of millions of dollars in a quarter. So this was unheard of, especially for a small penny stock. And they also announced that they were uplisting to the NASDAQ. And that's major news for a small penny stock in Canada. Those were the catalysts. Catalyst is a word that people use to talk about the stock price going up. What news or event is generating that capital coming into the stock? So now let me tell you about the lows, how I lost it all. So I remember when the stock was up a lot, I watched a video by a billionaire investor named Ray Dalio, somebody I looked up to a lot, somebody whose book actually I have here on this bookshelf, Principles by Ray Dalio, and I was reading this book a lot during that time as well. And he was talking about the state of the economy and how you should be in cash right now. And I had never gone through a recession during my short investing journey. At that time, I was probably up 300% on my investment in less than a year. And I didn't listen to his advice even to take a little bit of profits. So the fall of the stock was slow and the stock fell a bit over months and months. And I was still playing with house money. So I had turned an initial investment of $2,000 in Face Drive and a little bit of my savings into 6 figures. The company that I was invested in was a Canadian company that operated in China. At the time during COVID, the sentiment in China was not the greatest, as you know. There were not so great reports coming out of China as well. But because the stock was a Canadian company operating in China, NASDAQ had issues with it. And so although it got listed on NASDAQ briefly, and that was a really high point, because at that point, I felt like I had won the lottery. I was going to win the lottery and was going to continue to win the lottery. It quickly got delisted soon after, and the company had to submit proof to clear up some things. They never relisted the stock, and it took a dive. The thing about investing in penny stocks is you can make the high return, but also management is not going to be as high a quality as with large cap stocks. This small company, in the grand scheme of things, could not get their things together to get relisted onto NASDAQ. So the whole stock market took a hit during this time, and any big money that was in the stock exited the stock. So if people were selling out of quality names like Meta and Amazon, surely they're not going to hold on to PKK. Here's what happened with my decision-making process. So I averaged down by investing an additional $2,000 back when the stock fell from February to June 2021. But this time when it fell, it was different. I just hoped it would be temporary. I hoped that the stock would recover. Eventually, the people in the community that I was a part of started to say that management had failed, they had messed up, they had blown this huge opportunity, and they were very disappointed with the CEO and the company as a whole. So I ended up selling my shares when the stock hit just over $1 per share. So I had 7,000 shares, and it looks like I sold off 50 shares on the way down. So I began to sell in July of 2022. So I'd given up on the prospects of this company in the near future, and I wanted to protect the remainder of my capital. So August 3rd, 2022, I sold a total of 3,000 shares at $1.22 for a total proceeds of $3,660. On August 18th, 2022, I sold 500 shares at $2.33 for a total of $1,155. There's a statement missing, but I had 3,500 shares on top of that, so I probably had sold that for a similar amount. And I remember pulling out 10 grand, give or take. My initial 20 grand, I probably lost 50% on it. But again, I started with $2,000. It's not like I lost my life savings or anything like that. So when the gains were gone, I now had to pivot and figure out some way to make it all back. Although not immediately, but over time, I took a lot of the proceeds and purchased a course on day trading. It's not related to investing, but it's just a different avenue to make some money. I'll make a separate video on that experience and everything that I learned from that course, so make sure you're subscribed if you don't want to miss that. I also felt like I had a lot left to learn when it came to investing. There is a right way and a wrong way to go about things, and it's about the journey of learning and not being afraid to actually figure out the right ways to do things. The stock market is a tool. that can help you. It's not there to hurt you. You just have to actually put in the effort to understand it and study it, really, the way you would study and understand anything else. And the information is out there for free from, the Warren Buffetts of the world, the Monish Pabrais of the world, the experienced investors of the world. The information's out there on YouTube of what happens when the stock market falls, what happens with all these various scenarios that can happen when you own a stock. So here's what I learned. So the biggest mistake that I made during this whole roller coaster ride was to not take some profits while I was up. I should have taken some profits off the table when I watched that Ray Dalio video back when that video came out. So at the time, we were in a low interest rate environment and the average consumer had money to put into the market. Money was being printed to infinity. And the moment that the printer turned off or slowed down and the interest rate went up, the market fell exactly how Ray Dalio said it would. I guess I was very cocky because everything had gone right for me for so long. And that's the thing that happens with the stock market. When you don't know what you're doing, you don't have these rock bottom experiences, you don't get humbled, you don't think anything can go wrong. Whereas now I have a completely different mindset and understanding of things, and I'm a lot more conservative while I still do invest in growth opportunities, because at a young age you're supposed to go after growth. When you're older is when you go after fixed income. So here's what I would do differently. One of the main reasons why I started this channel, among other side hustles, is because my old mentality was that I was going to work a job and investing was going to build my wealth for me in a short period of time, and I was going to catch up to everyone else. To do that, I needed a high rate of return, which can only realistically be achieved with small companies that have high risk, like penny stocks, when you start out with a limited amount of capital. The moment you turn to more reliable, quality companies with less risk, your rate of return comes back to reality. You can't go from 20K to 100K in a year anymore, but you can go from 20K to 30K in a year if you know what you're doing. So my mentality shift from having to rely on a high rate of return to increasing my income and being satisfied with 10 to 20% a year for a long period of time. And I learned about compounding and the power of compounding. The variable now is the amount of money you earn and you save, instead of the rate of return that you're getting on the small amount of money that you have. So the problem was I didn't have much to invest back in 2021. So now I'm a lot more comfortable with doing many different things to increase my income, which wasn't the case back in 2021. Also, diversification. So my philosophy now is increase your income to the point where you can save as much money as you can and invest it into a low-cost S&P 500 index ETF like VFV here in Canada and VOO in the United States, and make that a large portion of your portfolio. That's what I learned. Large is obviously relative depending on the person. That's what I recommend to people, just buying the entire market. So what I do differently now is I would buy the low-cost index ETF, and then I would buy blue chip stocks like I presently do in my portfolio, which I'll be sharing later this year. So I buy companies that I use, I'm familiar with, that I believe in long term. Companies that are profitable. That's the huge difference. When the stock market falls, when there's volatility, the profitable companies are the ones that hold up the most and are least volatile. Blue chip stocks are all profitable. That's why they're blue chip stocks. The ones that will get you the best returns are the ones that can increase profits the most year over year. As long as you pay the right price for good companies, you'll do well. You can pay the wrong price for a good company and you would be really underwater right now. I would avoid penny stocks moving forward because there's so many quality companies out there. If the variable of my income and saving is within my means and I can change that, and I have the ability, I have arms and legs, and I have the ability to work, I have the ability to do different things like making this video, then I can invest more money into quality companies instead of taking on high risk. So there's no need for me to take on too high of a risk. I'm a much more patient investor now, and I have a much more longer term mindset. My advice to you is that maybe in the future, your friends and family or the news or someone or some article is telling you about a penny stock or a meme stock or a meme coin. And I would say to buy the reliable, safe, and boring thing first. Put the majority of your money into that. Then take a small portion of your money, maybe 5% or less or 2%, whatever it is, and put it into that hype thing. Because you need to live at the end of the day, and you need to go through those experiences to see that, okay, maybe it's great, you can make some money, it's similar to a lottery ticket, but most of the time, it's not gonna end well. Especially if you have limited knowledge and you're not obsessing over it. Because for me at the time, I was obsessing over that penny stock. I was very meticulous with how well I knew it because it was all the money I had. I put all my eggs into one basket, which is why you never do that. So you can put a small amount of your money into that hype thing, because you never know. But do this to manage your risk and become wealthy. So the majority of your money is safe and it's going to work for you. The small amount of money, it can take a ride or it can go down. We don't know. I've built my portfolio back to 5 figures. And that feels amazing for me. I know I'll hit 6 figures eventually, but this time I was able to maintain my wealth and grow it over time. And especially in this environment right now we're in with the tariffs, I'm able to make responsible, smart, strategic choices instead of scraping the bottom of the barrel with penny stocks like I did last time there was a downturn in the stock market. Now I'm able to buy quality companies for cheap prices, and I feel good about that because they're companies that I want to own. I value the quality companies that are so expensive relative to the penny stocks. It's like buying gold versus cardboard. So as I said earlier, if you're a new investor with limited capital, stay away from penny stocks. Trust me, you're not going to know the perfect time to buy and sell the penny stock at the best price, because there's a lot of stock price manipulation in the penny stock world, even if the company is good. I was only able to hold on till I 5x my money because I was part of a knowledgeable community. There was all these fake lawsuits, there was all this manipulation that happened, and if I didn't know any better, I would have sold out and missed out on this roller coaster, which was a considerable experience because I don't know how many people can say that they've gone through this and learned from it and weren't traumatized by it. You know, I've been wanting to make this video for a long time since I started my channel, and I'm happy I was finally able to dedicate the time to making this video and telling the story and telling it right, because this has shaped my love of the stock market and investing, and I wanted you guys to know about that. I hope this explains why I'm so big on conservative, boring, simple index investing, especially for beginners. Instead of, losing your money and not being educated and putting your money into penny stocks or buying mutual funds where the bank doesn't have your best interest at heart. I'm just big on empowering people to get educated and dip their toe in the water. So make sure you drop a like if you enjoyed this video and subscribe for more videos like this. And as always, I'll see you in the next one.